Hello, very good morning to all and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Tuesday, the 28th of May 2024. So before we start, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, or any recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term technical outlook on the various cross asset classes, that means ranging from the major stock indices, the major dollar pair, to key commodities, i.e. spot gold, XAU/USD, and West Texas crude oil. Let's have a recap of what has taken shape yesterday. So as we know, I did mention in my Daily Dose of Market Insight, yesterday will be a rather quiet session because the US stock market is closed for a public holiday together with UK as well. There's a spring, they call it the spring bank holiday, but Europe is still open as well as the futures market is still open. So overall, what we could see is that the major stock indices continue to actually rally, both on the Asia perspective, that means the Hang Seng Index, the China CSI 300, as well as the German 30, which is the German DAX, broke above a key upside potential trigger level, that means a near-term resistance level, which we highlighted yesterday as well in our short-term technical outlook. Later I'll touch on that when we go to the short-term technical analysis chart of the German 30 index. So overall, yesterday is also considered as a rather risk-on session because of the firmness that is being seen on the global stock indices, excluding the US stock indices because they are closed for the a public holiday in US, driven by the fact of this ongoing lethargic US dollar strength, which we also have been which we have highlighted yesterday as well in our daily dose, looking out for potential short-term dollar weakness that is actually driving this ongoing positive momentum or risk-on behavior that is being exhibited in the global equities market. So yesterday, what are the news flow that actually drive this ongoing dollar lethargic or dollar short-term intraday dollar weakness is due to the fact of a rather milky we call it a forward guidance from ECB. What's ECB? ECB is the European Central Bank Monetary Policy Officials. So let me highlight to you all. We're going to share over here. All right, give me 1 second. Okay, so there's this FT report, Financial Times report that was published yesterday, stating, quoting one of the key ECB officials, which is none other than the ECB chief economist, Philip Lane. So Philip Lane in this Financial Times report stating that ECB still need to be restrictive all year long, despite the fact that officials have widely telegraphed the first rate cut to come in next month, which is June the 6th. So what we could see over here is that more or less this has been fully priced into the market, because if you look at the 4 weeks or so, majority of the officials has already been prepped the market that, hey, you guys, I already state my intention. There's a high likelihood that the first interest rate cut in Eurozone will come in 6th of June. But thereafter, market will start to be forward looking. What we'll be expecting next after 6th of June? And based on the slew of ECB officials' public speeches, and the latest one yesterday that's been published by Financial Times, it seems to us that there's still rather unclear directional bias in terms of the timing of the next interest rate cut after 6th of June in Eurozone. So that actually also take off the clarity of the start of a more pronounced interest rate cut cycle in Eurozone that drive the euro strength against the dollar yesterday, which indirectly create this negative feedback loop in the dollar story. So what we could see yesterday, we start to see throughout dollar strength weakness based on this 5-day short-term rolling performance of the dollar against the major currency. So what I could see is that the dollar is the weakest against the sterling, in fact against the Kiwi, second up against the sterling, then third will be against the CAD and against the euro. So against the sterling, like I explained yesterday, why does the dollar is so weak against the sterling? Because of this upcoming UK election that's going to take shape in the 4th of July. And for the Bank of England, BOE, to remain apolitical, that means not being swayed by the current UK administration, very unlikely they will enact a first interest rate cut in June. That was also earlier telegraphed around 4 or 5 weeks ago during the prior BOE meeting. So very likely they will only kickstart their potential first interest rate cut in UK after the UK general election. This is being viewed that the Bank of England is still an independent so-called establishment or institute that is being not swayed by the current UK administration to push up for what I call that rosy policy to gain some votes ahead of the 4th of July UK election. So that's actually indirectly seeing this short-term dollar weakness against the sterling that's being expressed by this 5-day rolling performance chart in your screen right now that I'm showing. Then other news over here is that over in China, over here is that we do see much more piecemeal kind of indirect stimulus coming out from the China top policy makers. So yesterday, coming to the close of the Hong Kong session, China actually officially announced this 47.5 US dollar billion worth of billion chip fund to actually back the China semiconductor domestic firm to actually achieve self-efficiency as US seeks to restrict its growth. So under the surface, yeah, despite the fact that there's some meetings going on between US and China official, you and I guys knows that under the surface there are still this ongoing US-China high-tech war that is being battled out. All right. So during this battle out of this US-China tech war, China itself right now is very, very much in favor of having their own high-tech semiconductor industry that is pretty much independent from the rest of the world. So the China top policymaker has poured in 47.5 billion, this is US dollar. So in yuan, it's about 344 billion yuan into this China semiconductor, we call it investment fund. They nickname it as Big Fund 3 because this is the third installation. And within this current installation is the biggest funding so far. So that actually kickstart or jumpstart the Hang Seng index by gaining 1.17% by the end of yesterday's session. But bear in mind, in our short-term technical outlook, we really highlighted that there's some positive element as displayed by the hourly technical element. There is a potential so-called bullish reversal because right at the 20-day moving average after a slight late yet last week. All right, there was those who actually follow our daily dose of market insights. All right, so this is from the Asia perspective news driver. That overall from a national basis, this is this unfortunate event that is still taking place in the Middle East. So what we could see over here is Israel continue their offensive against the Gaza right now, despite the fact that world leaders and UN pleading them or advocating for them to actually have this peace talks with Hamas and the Palestinian Authority. But unfortunately, this hostility continue along the Gaza Strip. And yesterday, during the crossfire, they actually hit Egyptian's nationality, which is Egyptian Egyptian military personnel got actually hit in this crossfire. So right now there is this very, very fluid situation in the Middle East that is dragging other stakeholders into this unfortunate Israel and Hamas, we call it war that is pulling in now Egypt into play as well. Not forgetting over here is that Iran is still inside this picture, and potentially overall what we could see over here is that it could start to see a potential disruption of oil supply as oil could be used as a weapon of choice by these various stakeholder. So that's actually explained to us why oil prices actually went up by close to 1% yesterday, both on the WTI crude oil and the Brent crude oil itself. All right, so with that is actually the key economic data and news flow that I'd like to share for yesterday. So right now, let us now jump straight into the short-term technical outlook on the various broad-based cross-asset classes. So starting with the Asia Pacific benchmark stock index. All right, so let's start with the Nikkei 225 over here. All right, so let me expand my screen, Nikkei 225. And let me hide myself, okay, so that you guys could see. So overall, for sure, the Nikkei 225, as you could see in my screen over here, that it actually hit the first resistance at 38,975 before pulling back again during the start of today's Asia session. So still no change, still hovering above that short-term pivotal support that we highlighted on last Friday, 38,460. We saw confluence with this slightly upward sloping 20-day moving average. Still use this 38,460 as my short-term pivotal support for today to maintain this short-term bullish bias, to increase the chances of another potential, we call it positive momentum coming back into the Japan 225. It got to break above 38,975. Above 38,975 potentially takes us up for a retest of 20th of May swing high area at 39,500. Only hourly close below 38,460 will invalidate today's short-term bullish bias on the Japan 225 to see another round of choppy price action movement for a minor corrective decline to expose the next near-term support at 38,015, 37,775, which is pretty much crucial. Why? Because this 38,775 actually confluence with the is considered as a medium term key support level, which confluence with the minor with this ascending trendline support that is in place since late October last year. Okay, confluencing at around 37,775. Okay, so that's for the Japan 225 short-term technical outlook for today. Let us move on to the Hong Kong 33 index, i.e. the Hang Seng index. So same thing, price action hit up during the later part of the Asia session yesterday due to the positive feedback loop triggered by that official announcement of the China Big Fund number 3, okay, to jumpstart their local semiconductor industry. So what you could give me a minute, this thing is getting quite irritating. Okay, oh my, okay, let me push it down here. Okay, you guys could see this is the 1 hour, this is Hong Kong 33. Okay, so let me remove this. Okay, yes, this is better. Okay, so what you could see over here is that there's a rebound off from the 20-day moving average, and right now it's actually testing the first resistance at this 18,900 level. Is testing this level. So with that, price action still remains positive in terms of the hourly RSI momentum observation. Previously we had this bullish divergence staged this bullish breakout, a retest, and right now it hasn't even hit the overbought region yet, so indicating to us there's still some form of short-term momentum left on the short-term minor momentum left in the Hong Kong 33. So with that, no change, still using the 18,460 as my short-term pivotal support for today. So we do have a slightly higher first support level. Okay, let me highlight, which is very close to the 20-day moving average over here. That's acting as a support at around 18,700 level or 18,720. So as long as this any potential, this could be the first potential pullback, but as long as 18,460 short-term pivotal support holds, for now, we will still maintain that short-term bullish bias on the Hong Kong 33. Next resistance to watch will be at 19,210 level for our short-term technical outlook for today. Only hourly close below 18,460 will invalidate today's short-term bullish bias on the Hong Kong 33 index to potentially see the extension of this minor corrective decline to expose the next near-term support at 18,240, followed by 17,895 level. Okay, so that for the Hong Kong 33. German 30, which is the German DAX yesterday, Okay, so yesterday it staged that bullish breakout above this 18,730 first resistance that we highlighted. So this level now here is considered as a pullback level to watch, the first support level to watch for today. So we'll be around this level. Okay, let's push it down slightly lower. Yes, 18,690, which is just nice this congestion area, and now the minor descending trend line turns into a pullback support. So today support level, I will tighten it much higher, a much more tighter level to the 20-day moving average. Okay, so this will be my tighten key short-term pivotal support for today to maintain this ongoing short-term bullish bias for today's short-term technical outlook on the Germany 30 index. Okay, give me a minute. Let me tidy up. Okay, so now it'll be 18,570. Okay, so this will be the next support level. Okay, good. So using this Titan key short-term pivotal support for today for the German 30 at 18,570, we will still maintain that short-term bullish outlook for today's short-term technical analysis on the German 30. Next resistance to watch will be the current all-time high area at 18,920. Above it exposes the Fibo extension cluster level, which is the next resistance level that is being defined at 19,030/19,070. Only an hourly close below 18,570 will invalidate today's bullish bias to kickstart another round of minor corrective decline to expose the next support level at 18,470. Below it sees 18,320, with also confluence with the upward sloping 50-day moving average as well. Okay, so that's for the German 30. The US Wall Street 30, which is the Dow Jones Industrial Average, still no change because yesterday was clearly no liquidity because of the closure of the US cash stock market. So still neutral between 38,970, which confluence with the 50-day moving average acting as a support, and on the upside 39,390. So neutral between these two levels, 39,390 and 38,970. On the Nasdaq 100, it continues to be the top outperformer among the major US stock indices, going to evolve within this minor ascending channel after the bounce off from last Friday retest at the 18,580, or last Thursday retest at the 18,580 short-term pivotal support level. So still no change. The first support level to watch will be at 18,740, which is the lower boundary of this minor ascending channel. As long as any minor pullback didn't surpass below 18,580, we will still maintain the short-term bullish bias for today's short-term technical outlook on the US Nasdaq 100. First resistance to watch 18,990/19,055. Above it sees 19,168, 19,180, which is defined by a Fibo extension cluster level. Only an hourly close below 18,580 will invalidate today's short-term bullish bias on the Nasdaq 100 to kickstart another leg of a more pronounced minor corrective decline towards the 20 and the 50-day moving average, which is supporting at 18,230, followed by 18,100. Okay, so that's pretty much sum up for the major stock indices. So overall, the short-term technical outlook is still more or less holding on to their respective short-term support level, and a rather mixed bag for the US Wall Street 30. Okay, now FX market, I do highlight earlier on the 5-day rolling chart that we do see some form of short-term dollar weakness or dollar lethargic, we call it, coming back into the FX market. So with that, the euro dollar actually pierced up higher yesterday and hit the first resistance that we highlighted, 1.0860 level, 1.0860 level. Okay, so this will be considered as a first support level to watch, really. Okay, a first support level to watch. Okay, so if that's the case, I will actually tighten the key short-term pivotal support level for today at 1.0825 level, at 1.0825, which is this minor congestion area over here as well. So as long as 1.0825 holds for today's euro dollar, we'll still maintain that short-term bullish bias for today. Next resistance level to watch will be 1.09. Above it exposes 1.0925, 1.0940 on the euro dollar. Only an hourly close below 1.0825 will invalidate today's short-term bullish bias to see another round of choppy corrective decline to expose the next near-term support at 1.08, which is a confluence with the upward sloping moving average. A break below it exposes 1.0770, which confluence with the 50-day moving average, and as well as the minor swing low of 10 of May and 14th of May. So that's for the euro dollar. Then for the sterling dollar as well, it actually managed to break above yesterday's first resistance. Now turns into a pullback support at the 1.2760 level. So with that, I will tighten the short-term pivotal support level as well on the sterling dollar at 1.2710. So as long as 1.2710 holds, we'll still maintain that short-term bullish bias on the sterling dollar. Next resistance level to watch will be the upper limit of this minor ascending channel that is coming to act as a resistance as well, conferencing with a Fibo extension level of 0.618 from here, from the low of 19th of May. So this minor ascending channel, if I were to reduce it, you guys should be able to see it, is this level here. Okay, the low of 22nd of April. Okay, so 1.28 figure level will be the next resistance level to watch. A break above it exposes 1.2860. Only an hourly close below 1.2710 will invalidate today's short-term bullish bias on the sterling dollar to kickstart another round of minor corrective decline to expose the next near-term support at 1.2670. Below it exposes 1.2640. /1.2610, which is also confluence with the rising 20-day moving average, acting as a support level as in this similar zone, support zone of 1.2640, 1.2610 as well. Now, Asia Pacific dollar, major dollar pair will be the Aussie dollar. So for the Aussie dollar to look out for will be no change. Price action continue to pierce up and clear above the first resistance that we highlighted yesterday at 65.50. So given the strong push up in today's Asia session above 66.50, we will tighten the short-term pivotal support level to 66.15. So which is also confluence with the rising 20-day moving average as well. So as long as 66.15 tighten short-term pivotal support holds, we'll still maintain the short-term bullish bias. Next resistance to watch 67.10, which is the minor swing high of 16th of May and 20th of May. Above it sees the medium-term range resistance coming in at 67.30/67.50. Only an hourly close below 66.15 will negate this bullish tone to see another round of choppy corrective decline within a medium-term range configuration to expose the next near-term support area at 65.85, followed by 65.50, which is confluencing also with the 50-day moving average as well. And why do I say that the Aussie dollar is still in a medium-term range configuration, pardon me? By flipping immediately to the daily chart, you can see over your screen here, since 3rd of February, it has been, previous rally has been kept by this descending trendline resistance, and previous low has been kept by this ascending trendline support, drawing from the low of 13th of October 2023 low. So very clear, this is a medium-term symmetrical triangle range configuration that the price action of the Aussie dollar that is still evolving at this juncture. All right. Dollar yen, so the dollar yen over here is sideways yesterday. So if you look at the dollar yen, it's going to trade sideways. So still no change, still using the 155.90 as my short-term pivotal support level to maintain this rather minor short-term bullish bias on the dollar yen. First resistance to watch for today will be last Friday swing high, minor swing high at this 15720. Above 15720 potentially expose the next resistance at 158. Only an hourly close below 155.90 will put the bullish bias in jeopardy for the dollar yen to expose the next near-term support area at 155.20, which also the minor trend line support, minor ascending trend line that I drew from the low of 3rd of May. Below it sees a further potential slide to retest the 50-day moving average. We are also confluencing with the minor swing low of 16th of May that is acting as a support at 15410/15370. Okay, so that's for the dollar yen. All right, spot gold XAU/USD continues to remains rather firm above the 20-day moving average that has been recaptured yesterday, but it hasn't surpassed the first resistance that we highlighted at 2,355. So still no change, still using 2,307 as my short-term pivotal support for today for spot gold XAU/USD, which is confluence also with the very closely to the upward sloping 50-day moving average, and as well as this minor congestion support area from 8th of May and 9th of May. So as long as this 2,307 key short-term pivotal support not surpassed to the downside. A breakup above 2,355 may expose the next near-term resistance at 2,407 next in the first step. Only an hourly close below 2,307 will put the bullish bias in jeopardy to see the continuation of the minor corrective decline towards the medium-term medium-term support zone of 2,280/2,260, which is also confluence with this medium-term this ascending trend line support that I drew from the low of 14th of February this year. Okay. Now, lastly will be West Texas crude oil. So given the ongoing this called a very fluid Middle East situation that is supporting geopolitical risk premium, we do see a rally of close to 1%, 0.9% of West Texas oil yesterday, and managed to recapture back the 78.50 medium-term pivotal support that we highlighted earlier. All right, so there was a breakdown of it on last Wednesday and Thursday, and as well as Friday. All right, but thereafter the price action managed to move back up again above 78.40. So potentially, right, this movement over here, okay, let me share, let me highlight to you all this very brief bearish breakdown movement over here. Okay, oops, let me, okay, give me 1 minute. My mouse, the thing is seems to be hanging right now. I don't know why. Okay, 1 second. Let me delete this. Let me delete this. Okay, let me draw a proper one. Okay, this rectangle. Okay. Okay, so this movement over here, right, could be potentially a failure bullish breakout. All right, why? Firstly, price action capture above 78.40, and what we could see over here is that there is a series of lower low on price action, but yesterday's latest price action on the daily RSI has started to shape a higher low. So giving this kind of medium-term bullish divergence condition that's being flashed out on the RSI as well, indicating there's a high odds of a failure bullish breakdown that was exhibited from last Wednesday, Thursday, and Friday. Okay, so a bit cautious right now on the bearish short-term bearish bias on the West Texas oil. So with this positive positive technical elements that has been developed in a higher time frame chart, the daily chart of the West Texas oil. So for today, we will flip to a bullish bias over here, looking at this potential formation of a minor double bottom formation, taking from the minor swing low of 24th of May last Friday and the previous Wednesday on 15th of May at 76.70. So 76.70 short-term pivotal support level to watch. First support will be slightly higher at 78.20, but I don't put it so tight at 78.20 because it's still hovering within this potential minor bullish bottoming formation, and the neckline of that bullish bottoming formation is 80.50, okay, which is close to the 200-day moving average as well. So right now it's trying to break above yesterday's short-term pivotal resistance level, which now turns into a first resistance level to watch for today at 79.25. Above 79.25 exposes the neckline resistance of this potential minor double bottom configuration at 80.50. Only an hourly close below 76.70 will invalidate this so-called bullish bias tone on the West Texas oil to continue with the corrective decline slide to expose the next support area at 75.40, followed by 74.20 over here. Okay, the minor congestion of 2nd of February and 7th of February. All right, so that's for West Texas oil. So with that, we've come we covered much ground on the short-term technical outlook on the broad asset classes. So before we go today, let's take a quick look at the economic calendar of what are the data to look out for today. So in fact, today itself, Tuesday will also be a rather quiet session. So what we have earlier, okay, I believe this is European time. Okay, so at 12:55 p.m. Singapore time, we do have Fed. One of the Fed officials speaking, Fed Meister, she's speaking at 12:55 p.m. Singapore time, and thereafter during the European session will be rather quiet. So before the start of the US session, we do have some key housing data to look out for. The S&P/Case-Shiller home price index for the month of March. So this is rather backward looking because housing price data tends to be stale prices, so they take some time to collate. So at 9 p.m. Singapore time, your release of the housing data, and also at 10 p.m. Singapore time, we do have the Conference Board consumer confidence data for US for the month of May, and thereafter it will be a rather quiet session, followed by 2 Federal Reserve officials speaking in the wee hours of Singapore time at 1:05 a.m. Fed Cook and Fed Daily public speeches. All right. So with that pretty much sum up for today's Daily Dose of Market Insight for today. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.